In the ever-changing financial markets, a single perspective is like gazing at the sky, but focusing on just one star. True trading masters see through multiple time dimensions, perceiving every market pulse. Today, we will guide you into the world of multi-timeframe trading, where layer-by-layer filtering helps you capture high-probability opportunities with precision. Welcome to the Inventor's Strategy Selection channel. In the world of fast-line trading, there exists a group of traders with mysterious market intuition. They seem to capture every market pulse with remarkable sensitivity, having an almost intuitive control over long-term trend direction, mid-term structure changes, and short-term entry timing. These traders navigate minute-level rapid fluctuations with ease, entering and exiting frequently, yet always hitting the right rhythm. However, behind this seemingly magical intuition lies a huge cost. To maintain this level of control, traders must constantly watch the charts, continuously switching between multiple time frames for analysis, which is extremely draining. This high-intensity focus over long periods not only leads to decision fatigue, but can also result in total losses due to overlooking just one time frame at a critical moment. The multi-timeframe market structure trading strategy we are introducing today was created to solve this exact problem. It systematizes and programs the intuition of top fast-line traders through a strict multi-timeframe verification mechanism, automatically coordinating analysis across long, medium, and short time dimensions. This allows average traders to possess the judgment capabilities of fast-line experts without bearing the enormous mental burden. This is the benefit technology brings us, using systematic power to replicate the thinking patterns of top traders. The multi-timeframe market structure trading strategy is a minute-level fast-line trading framework based on timeframe fusion. The core concept is filtering market information through different timeframes to generate high-quality trading signals. The strategy uses a top-down analysis method. First, it determines market bias using the 1-hour chart ANA to ensure trading direction aligns with the major trend. Next, it identifies mid-term market structure turning points using the 15-minute Mayseed indicator, which is key for entry timing. Finally, it filters market noise with the 5-minute ATR volatility indicator to avoid opening positions in markets lacking momentum. Since this is a minute-level fast-line trading strategy, position holding times are relatively short, typically completed within minutes. Trading signals must simultaneously satisfy conditions across all three timeframes to trigger, while exits primarily rely on 15-minute Mayseed reversal signals or preset stop-loss and take-profit levels. This design ensures both rigorous entry criteria and quick, flexible exit mechanisms, making it suitable for capturing minute-level market fluctuations. The core parameter settings provide the foundation for our trading framework. First, the strategy statement defines the strategy name, with overlay equal to true indicating the chart will draw directly on the price chart. The default quantity value of 10 sets the default trading amount. Next, the strategy defines key risk management parameters. Leverage is set to 10, take profit percentage is 15, and stop loss percentage is 5, forming a 3-to-1 risk-reward ratio commonly used by professional traders. These parameters are not fixed and can be adjusted based on your risk tolerance and market conditions. For example, in high volatility markets you might need to widen your stop-loss settings, while in low volatility markets, you could consider reducing take-profit targets to improve success rates. The indicator definition section embodies the essence of multi-timeframe analysis. First, we use the request security function to get the closing price for the 1-hour 60-minute period and calculate a 50-period simple moving average. This hourly level moving average is the foundation for determining overall market bias, with price above the average indicating bullish bias and price below indicating bearish bias. Experienced traders know that compared to shorter periods, longer period moving averages provide a more stable market direction reference, reducing misleading signals. Next, the strategy obtains the 15-minute period closing price and calculates the Mayseed indicator as a momentum indicator, effectively identifies midterm market structure changes, with the MACD line crossing the signal line representing potential trend reversal points. The key innovation here is not simply using MACD crossover signals, but combining them with the larger timeframe direction, considering entry only when both align. Finally, the strategy uses the current default timeframe, 5-minute ATR indicator, to assess market volatility and sets a threshold as a filter condition. This design avoids entry when market volatility is insufficient, effectively reducing false breakout signals. The combined use of these three layers of indicators forms a top-down filtering mechanism that greatly improves trading signal quality. The signal generation section is the core of the strategy, integrating market information from three time frames to form strict entry and exit conditions. Long entry signals require three conditions to be met simultaneously: a bullish bias on the 1-hour time frame, a bullish MACA signal on the 15-minute chart, volatility above the threshold on the 5-minute chart, and no current position. Short entry conditions follow the opposite logic. This multi-condition design greatly reduces false signals, triggering trades only when the market truly has sufficient momentum. A key observation is that most failed trades often occur when market direction and volatility are misaligned, which this strategy effectively avoids through multi-timeframe filtering. Below are the mid-timeframe trend reversal exit signals, mainly relying on the 15-minute MACD indicator. When holding a corresponding position, if the MACD line crosses below the MACD signal line, it indicates weakening uptrend and strengthening downtrend, defined as a long position exit signal. The opposite defines a short position exit signal. This design allows positions to be maintained during trend continuation and exit promptly when reversal signals appear, capturing most profits from midterm trends. Notably, the reversal exit conditions only focus on midterm period reversal signals, not requiring all 3 periods to reverse, allowing the strategy to remain robust while not exiting potential major trends too early. The strategy execution section converts trading logic into actual trading operations, including entry, exit, and risk management. When long entry conditions are met, the strategy opens a long position using the strategy entry function. Similarly, it opens a short position when short conditions are met. It is worth noting that the strategy already checks for no current position in the entry conditions, avoiding the possibility of duplicate entries. Exit mechanisms include 2 types. First, trend reversals based on technical indicators, where the strategy uses the strategy close function to close the corresponding position when MACD signal reversal is met. Second, automatic take profit and stop loss based on preset risk parameters. The calculation of take profit and stop loss is very precise, considering leverage factors. For long positions, the take profit price is set to the entry price multiplied by 1 plus the take profit coefficient, specifically the take profit percentage divided by 100, then divided by the leverage multiplier, while the stop loss price is the entry price multiplied by 1 minus the stop loss coefficient. Short positions use similar mirror logic. This calculation method accurately reflects the expected risk-reward ratio. The take profit and stop loss mechanism set through the strategy exit function, combined with the mid-period trend reversal exit based on technical indicators, forms a double safeguard that can both capture sufficient profits in major trends and timely stop losses when the market changes unfavorably, effectively controlling maximum risk for each trade. This flexible yet rigorous execution mechanism is a key feature of professional trading systems. The visualization design transforms complex multi-timeframe analysis into intuitive graphic displays. First, the strategy draws the 50-period moving average from the hourly time frame on the price chart, with this blue line clearly marking the overall market bias. Even more clever is the background color design, where the chart background appears light green when the hourly time frame shows bullish bias and light red when bearish. This design lets traders identify the current market environment at a glance, without repeatedly switching time frames. Entry signals are displayed through shape markers, with long entry points marked by green upward triangles below the candles, and short entry points marked by red downward triangles above the candles. Additionally, the strategy dynamically draws the current position's take profit and stop loss level lines, with green take profit lines and red stop loss lines for long positions, and the same for short positions. These visualization elements are not only aesthetically pleasing but more importantly provide practical trading assistance, allowing traders to clearly grasp the current market state, entry signals, and risk control levels. Through this comprehensive and intuitive visualization design, complex multi-timeframe trading strategies become easy to understand and execute, greatly enhancing the strategy's practicality. The multi-timeframe market structure trading strategy is a minute-level fast-line trading system particularly good at handling markets with clear trends. When medium to long-term trends are just forming, this strategy determines direction through hourly timeframes, confirms structure through 15-minute timeframes, and then combines with 5-minute volatility filtering to create a progressive entry logic. This effectively captures key waves at the beginning of trends while reducing risks from false breakouts. In bull markets, the strategy can capture multiple strong pullbacks within rising structures. In bear markets, it can identify shorting opportunities after rebounds end. In ranging markets, the strategy's filtering mechanism is especially crucial, avoiding ineffective trades in low volatility ranges. However, this strategy does not adapt well to all market environments. In rapidly reversing trends or extremely volatile markets, the strategy may suffer losses or miss opportunities due to lagging signals or tight stop-loss settings. Therefore, when using this strategy, traders need to pay special attention to how trading fees can erode profits from frequent trading and dynamically adjust stop-loss percentages based on market volatility. For advanced usage, you can fine-tune the volatility threshold based on different cryptocurrencies' characteristics, or confirm signal strength with trading volume, possibly increasing position size in volume-supported breakouts. Additionally, you can further optimize strategy parameter configurations based on different coins and personal trading styles to improve overall adaptability and profit quality. This multi-timeframe strategy has a reasonable overall design with good practical value. In terms of completeness, it has a complete logical chain from signal generation to risk control, with the triple filtering mechanism greatly improving signal quality, scoring 4.0. Risk management adopts a classic profit-loss ratio design, combined with MACD reversal exits, allowing traders to both capture trends and stop losses timely, scoring 4.2. Adaptability performance is excellent, as the multi-timeframe analysis can adapt to different market environments, performing well in both trending and ranging markets, scoring 4.1. Understandability is a highlight of this strategy, with clear logic and intuitive charts that even beginners can quickly grasp, scoring 4.3. Innovation is shown in the organic combination of 3 timeframes to form an excellent filtering mechanism using traditional indicators, but in a clever combination, scoring 3.9. For practicality, the strategy parameters are flexible, can be adjusted for different coins and trading styles, and the visualization interface provides a good user experience, scoring 3.8. Overall, this is a well-balanced multi-timeframe trading strategy, suitable both for learning multi-timeframe analysis and for practical trading. For traders wanting to systematically learn multi-timeframe analysis, this is an excellent starting point.